Welcome. Hello. It's time for BlockTalk. We are on Bitcoin block 436377. Yeah, we're just moving along pretty good. Oh, I didn't load that page up. Uh, so yeah, oh, here we go. Mempool is kind of at a bit of a low here, but we did have a nasty little hiccup earlier in the week that finally kind of chugged on through. Got a couple sponsors. First off is Tech, working in blockchain technologies. These guys have a lot of expertise in the payment solutions and doing some online security, and also some training videos that I'm actually creating for them to educate the public a little more on cryptocurrencies. Our other sponsor is Bitfinex, the next generation crypto exchange. Yeah, specializing in digital assets. These guys have a number of different markets, I think over 100, including Ethereum and USD pairings. So yeah, check them out today at Bitfinex.com and do some trading. As usual, I have the live chat going here, so if anyone has any questions, then feel free to ask. And on the show today, we have Bank to the Future. So let's first introduce our wonderful candidates here. Hi, I'm Alex, and then we have our live audience, Decontrol, with a couple of, excellent people who are knowledgeable in both the cryptocurrency and economic space. I'm sure some interesting commentary for tonight. Yeah, everyone's just looking around. It's like, where is these guys? I don't know. Okay, well, and we have the guest of honor, Simon Dixon of Bank to the Future. Hello, Simon.
Hello, thank you for having me. Pleasure to be here.
Well, we appreciate you coming on the show today and telling us a little bit more about Bank to the Future and some of the awesome projects you've been working with in the space. So I guess, do you think you can start us off with telling us a little more about what Bank to the Future is and a little history of it?
Yeah, so, well, Bank to the Future is an online investment platform. We have, I believe, the largest database of accredited investors and from all around the world that are looking, and we definitely have the largest database of them that are looking to invest in FinTech. Really, Bank to the Future was actually kind of a 5-year journey with 4 years in regulations. And then we launched about a year and a half ago. We're niche to FinTech, and we've had about $100 million plus invested online in rounds that have been featured on our platform. So we're specializing in deals with blockchain, with Bitcoin, with FinTech, and really, yeah, it all came from many years ago. Well, in 2006, I left investment banking to write a book called Bank to the Future. And that book was on systemic risk in banking. And then the second draft of the book was shortly, I think it was the second or third, was shortly after Bitcoin launched. And I was talking about FinTech at the time. Before it was a word, I wasn't using the word FinTech. About how that could actually change. Rather than having to wait for top-down reform for governments, we could have bottom-up reform. And that got me an invite to the first Bitcoin conference in the world in Prague, which I spoke at. And that really got me intrigued in Bitcoin and have been investing in the sector, and really launched a platform because wanted to provide a way for me to be diversified across the growth of the whole sector, because I didn't really know which companies were going to be the right ones. So we built the platform for me so that then I could then also have others co-invest. Yeah, it's kind of built from there, and now it's become a company in itself and a financial institution.
Cool. So do you think you can clarify for us what an accredited investor is?
Yeah, sure. So we've integrated with over 50 different financial securities acts, all the main ones around the world. And each jurisdiction has their own definition of who can invest in high risk, high return propositions like private equity, because this is stock in private companies. Now, regulators all around the world have built, the belief that this is such a high risk product that it's not right for retail investors, and retail investors are just average Joe that wants to invest a small amount of money, or they might invest it in the stock market, they might invest it in the crypto market now. But private equity is restricted to certain investors. So what we've done is we've taken each Financial Services Securities Act, depending on the jurisdiction of the investor. They have a definition when they sign up of who's allowed to invest, who's not allowed to invest, and it varies from jurisdiction to jurisdiction. So, for example, in the UK, they've pioneered a sector called crowdfunding, which we were involved with, equity crowdfunding. So they're open to different types of investors, whereas say in the US, which are still working through different Jobs Act and different changes to allow more people to invest. So we allow the maximum number of people to invest that the law permits, and depending on your jurisdiction, when you sign up, it will tell you if you qualify or not.
So do you have many issues with investors coming from the United States? I know that area has kind of a lot more regulations in place for doing investments in these areas.
Yeah, so when we built our model, we also built it with Silicon Valley Legal Counsel. We've got a multi-jurisdictional company structure. That's why there was like 4 years in regulations. We have a compliant process for accredited investors in the US to be able to invest, whether they can invest using fiat currency. We're integrated with 25 different fiat currencies or 35 different cryptocurrencies, with only really one that matters at the moment.
Is that Bitcash?
Well, Zcash might turn out to be, according to the market today, it's 20 times more valuable than Bitcoin, even though no merchant accepts it.
Yeah, I think that's due to the fact that there might only be like less than 200 currently on the market. So there's a little bit of inflation going on with in the price. But yeah, we'll be watching it closely. Maybe they'll be looking for more funding on your platform sometime in the future. We'll see. But you've had a number of very prominent cryptocurrency projects on the website. Very impressed, like MadeSafe, Factum, Scenario, and recently I just see you have Airbits is doing a funding round on it.
Yeah, so Airbits is live at the moment, we get a lot of applications, but we try to pick the companies that we work with by several kind of criteria. The first is normally they've already secured a lead investor, so the lead investor has been through a lot of the due diligence process. So many of them might have secured VC funding, or they've secured funding from a prominent angel investor in the sector, been through their due diligence, and then we put them through our process because we have to comply with regulations there. We have to verify certain things that are said on the pitch, and then we put them through the scrutiny of our investors as well. So the interesting thing is we found if you look at any pitch on Bank to the Future, it's kind of a standardized format of the business plan. We provide the basic details and verify that those details are factually accurate, because they have to provide evidence for that. But the real scrutiny and the real business plan develops in the investor forum. So really, when you put that business plan, a basic business plan, in front of our community of thousands of investors, we've got a couple of different types of investors. We've got ones which are really knowledgeable in the Bitcoin sector, techies, people that have made a lot of wealth in the sector and really understand it. But we've also got a lot of just very wealthy people that rely upon them asking a lot of the questions and the technicals. But they're pretty business savvy, or they're pretty investor savvy as well, because they, unless they inherited the money, they've generated quite a lot of wealth somehow. And so you get a really good business plan in the end, because you have the basics on the platform, you have the video, and then you have the forum where all the meat comes out, all the technical due diligence, and the scrutiny of some pretty savvy business people that put it through. And by the end of that, you really get a good sense of, is the valuation wrong? Is the technicals anything? Is there any meat behind this? Who are the team? And so it's just a really, we believe, a really good way of assessing a business so that you can build a diversified portfolio in a very high risk asset class like investing in fintech companies.
Yeah, like one thing we've kind of I really tried to bring on board here with BlockTalk is examining projects from three different points. Like first off, you just have the idea itself. If it's a good idea, at least on paper, if you're going to get you know sparks start flying sort of thing. And then you have the technology side of things, like are you actually doing something innovative, or do you have the technical expertise to do what you say you're going to do. And then the third thing we look for is the business side of things. So you have like proper funding. Is there a plan in place for funding? How are you planning on keeping runway, building out the whole platform? So it's kind of interesting that you say investors are kind of the best way to scrutinize any project, because I definitely see a lot of parallels with that.
That's interesting. Maybe when a company goes live, we should put them through the BlockTalk DD process, where they have to come on a hangout and go through your three layers of DD.
Yeah, well, looking at some of the projects, we have had quite a few of them on. I know we talked to Storage recently. I believe I talked to Paul Snow of Factum in the spring. But yeah, I was really hoping to get Kim.com on with you earlier. I know I heard some of his chat on the crypto show, and we were hoping to get some more details of Bitcash.
Yeah. We recently did a deal with Kim.com. This was a really high risk deal. There's legal challenges. There's technical challenges. But yeah, I tried to get Kim on, but he's a busy guy. He's not so easy.
Yeah, he's kind of fighting the court battle against the Hollywood and military industrial complex sort of thing. He's a busy man in that regard.
Yeah.
But you think you can give us a quick overview of what Bitcash maybe is, or what he's
yeah?
hoping to
So Bitcash is a seed funding concept. It was founded by Kim.com. Kim.com created a website called Mega Upload, which was a precursor before things like Dropbox and Google Drive. He's now, after having a very high profile battle with the US government, where the business was shut down just before his IPO, where it was going to be floated as a multi-billion-dollar company. The US seized all his assets because some of his customers were using it to allegedly share pirated content. So since then, the laws have changed a lot. He relaunched a different version of the service, and that was allowed to run. It's a very interesting case. I'm not a lawyer, but we got legal opinions on there. But he's now come back to launch Mega Upload 2, which is essentially storing and sharing files, but he wants to do it encrypted end to end, so he doesn't have any of the liabilities there, I guess. And he wants to integrate it with Bitcoin, through a service he's looking to create called Bitcash, which is designed to take lots of Bitcoin transactions off chain and allow for billions of file transfers. If the Lightning Network and all that stuff works, and there won't really be a need for the service. But he's got a lot of users. He's got a database of a couple of 100 million users. So he wants really high volume from day one for when he launches it next year.
And I know I heard him say on the crypto show about if you upload to Bitcash, immediately you can choose several other platforms at once, so you could be on Storage or possibly Made Safe, and there could be a lot of different interconnections of your data with all these other services. So it's kind of interesting what he has planned.
Yeah, so one of the things we try to do is, because we're invested across the entire sector of the Bitcoin blockchain ecosystem, we tried to put some of our portfolio companies together. So, we invested in Storage, MadeSafe, and Mega Upload too. So we want to, when Kim came to us and said what we're doing, I wanted to make sure that he's aware of the existing projects that have been working for years, so he could work at leveraging some of their work and kind of just put a consumer-facing layer on top and go to his strengths, which is PR and marketing, even though he is a very accomplished technician and he does have the ability to recruit. Mega Upload had a couple of hundred staff and he knows how to scale a company from the business side. So, but my opinion is that technology is not where the big innovation needs to come, although he does want to do that. I think he should be leveraging other projects which are specializing in such things. And Storage, it's been a quiet project for many because they've been doing so much behind the scenes, but they just released integration with Heroku, which I think it's gone under the radar a little bit, but that's a really big thing that a server company like that many startups are using. You can now rather than putting it, you can use it on the storage servers. So that project is really, really interesting to me.
Now, one thing I've noticed, one thing that kind of differentiates Kim's funding round from, say, Storage and MadeSafe scenario and several others like even Factum, they all did ICOs to start with, I guess, to kind of garner some funds from the public directly. Can you, I guess, comment on if there are certain qualifications that need to be met, or is that something that you guys look for on your platform for projects as well?
Yeah, so ICOs is a really interesting issue. So many people on the investor forum and we're tweeting Kim, hey, where's Megacoin? Where's Megacoin? The answer was there's no need for Megacoin because we're using Bitcoin. And so I could pretend and make a coin. But the only thing I'd make that coin for is the purposes of raising finance. And our legal opinion from our counsel, when we've looked at this, pretty deeply, is that if you're creating a coin for the purpose of raising finance, and that falls within the definition of a security, and therefore you need to follow the same guidelines and compliance that we do, which none of the ICOs do. And so, the main jurisdiction you always need to worry about is America and the SEC. And so if they want to claim jurisdiction on these ICOs at some point, and the first one they would have claimed jurisdiction on would have been the DAO, because that would have been the first large scale case of investors losing money. So it's not that they attack you when you do it, it's when investors lose money. And the funny thing about the crypto sector is they're all, oh, I hate regulators, I hate regulations, I hate all this stuff. But the second they lose money, they're like, someone should tell the SEC, someone should call this, and they go right back to, actually, this is what regulations were meant to be for. So it's an interesting area, and that's why I'm really interested in some of the market forces that are being used. So we'll go into it later, but I think Bitfinex is just a really interesting example of how you can use some of these market tools to figure out how you might be able to make investors whole without having to have liquidity proceedings and regulatory and things that just pay accountants and lawyers and that take all the money. So we'll get into that one later. I've gone tangent, but I see the question.
As a Mt. Gox accreditor,
So
in Japan has been so slow and so useless that anything would have been better right now, to me, I think.
Yeah, so Mt. Gox versus Bitfinex is, I believe, a case study that will be read by our children in economics books in history, because there's so many interesting concepts to take out of that, and we'll discuss that one later in the time. But the ICO side, so if you look at the common factor with Storage, that we invested in, Made Safe that we invested in, and Factum that we invested in. The common case is that, you know, whether you agree or disagree, the token was, you know, software. It did have a use. So in the case of Factum, you know, people can contend this because you could probably use Factum without the token. But at the moment, the token's an integral part of the model. With storage, it's definitely an integral part of the model. That's how they will be paying people that are contributing computer power to the network. And we're Made Safe. Safe coin is an integral part of it. So the place that we've reached is that if there's a genuine user case where, you know, a not-for-profit part of the business, i.e. the foundation building the technology, needs to, you know, has an app coin, then we believe that there's a compliant way of doing that and doing an ICO and doing, well, ICO comes from public offering, it's an initial coin offering. But there's consequences. So with all of those companies, they had to spend an awful amount of time with lawyers to make sure that they were structuring the ICO that they did in a way that doesn't prevent them raising additional finance when doing an equity offering on BnkToTheFuture, for example. So, you know, there's real consequences to it. So you've got to really know what type of project you are before you actually come and do an ICO. And there's major differences and major consequences that come later, not necessarily during the funding process.
So when these companies with their own coin are doing a funding round, is that something that can be included in the funding round? Is that you get some coins, or are you only getting shares of like the development company that's supporting the network?
Yeah, so we're pretty, you know, our customers are our investors. If we continually give deals that have dodgy coins that pump and dump, then we're not going to be in business for long. So we try to avoid these ICOs and altcoins as much as we can. But on some occasions, we have the opportunity to do something really interesting, which is investors can buy equity in the company. And then if it is a company that has some kind of altcoin attached to it and there's a genuine user case for that coin, then they could offer the coin as a bonus as well. So investors get the long-term illiquid equity to benefit from the growth of the company. But also they could get some of the short-term liquidity of an ICO to give them some short-term returns if they want to exit quicker. Depending on whether the coin has a genuine user case, because the whole point in a coin is it has to be used. If there's no reason for it to be bought, then it's only going to be sold. And when it's only going to be sold, investors are going to lose their money. So yeah, we can do interesting things like that. And we do that where we can, where it's an option, but we mainly focus on the equity side. So.
Oh, there we got a question. Oh. Okay, so did I hear correctly? You've done 3 deals. I heard Made, I heard Factum, and I can't remember. I didn't hear the other one. Is that correct?
So we've done, you know, over 50 deals, but the ones that have coins.
Okay.
Done, they did the coins on their own, but for the next round, we got the company in a position where we could then do equity for the for-profit side, where as a separation to the foundation.
The public disclosure location where we can look at those the companies that are actually attached to these coins. You know?
Oh yeah, absolutely. So we work with the company for approximately, it normally takes 2 weeks to a month, working on all the disclosures and the business plan. And so if you go to BnkToTheFuture, you look at the pitch. There's the public information.
So is sort of the value-added proposition about working with you is that you have this repository of data that I can mine on my own, or do you want me just to focus in on the deals that you're working on right at the moment? Like, why would I come to you? Are you like a middleman, or are you like an intermediary?
Okay, so maybe we're on a slightly different page. The reason that people invest through us is because we normally get exclusive right on the equity to do the fundraising round. So we pull together all of our investors into one entity where we can combine our voting rights and kind of act like a VC investor in the company, and we allow. Yeah.
So, like, I need to know, as a guy who's sitting there trading cryptocurrencies, I didn't realize that there is actually a private company behind Factum, and there's a whole bunch of valuation metrics that could totally affect that coin in the marketplace, right?
Absolutely. So yeah, I mean, there's coin, which is a different, but one thing we need to know is that equity and coin are definitely very different products. And if you want to get exposure to a company and they got both, then you want to be exposed to both. And so, but the equity does perform differently.
It would help the community to know what it is, which ones actually are private entities that are out there actually raising capital and selling equity in their issue. And I understand that only certain people can participate in.
Sorry, could I just interrupt you? I just realized I've got a low battery. I'm just going to plug myself in. 1 second.
Okay.
He's running off to call his lawyer.
That's actually pretty big, right? I mean, if we, take your library coin, for example. If we knew that there was a private company behind that was getting equity financing, that would change that story completely.
Okay, sorry about that. I'm back.
All of these companies are private. I mean, they all have equity of some sort. They have ownership, which you can divide up.
Yeah, so let's take the case study of Factum. So the coins belong to the foundation, which is a not-for-profit company where they develop the open source software, and then on the side, they have a business model and a for-profit company, which is making use of the technology. So people that want to speculate on the use of the technology, depending on the economics around the coin, can use the coin. But people that want to speculate on the profit side of Factum, if they qualify to invest and they're listed with us, then they could invest in the company. And the two perform different functions, but it's
okay. So what's the difference between a guy just throwing 10 grand up and having an OTC bulletin board pink sheet listing and raising equity that way versus going through you? Like, why would I do one versus the other?
Well, the first thing is it's going to cost you a lot of money to do that pink sheet listing, I guess I think the main thing is that we've got a niche community of investors all investing online that really want fintech to disrupt banking. And so all of our investors are kind of aligned with this same vision and goal, and they're all building diversified portfolios across the whole sector. So I think that one of the main value adds we bring is investors that actually get and are interested in what you do. That we can then pull together through an SPV, and then so the difference being is that if you wanted to sell shares to the public, then you have to be a public company. So I used to work in investment banking doing IPOs, and the minimum to invest in the equivalent of pink sheets in London, where I was working at the time, was the alternative investment market. And just to list with us, just to speak to me as a corporate financer, it was $250,000 fee, percentage of all management fees, percentage of everything, intense compliance, and so becoming public is too expensive because it will cost you more than you're actually raising in many cases. So
like that's the in Canada, for example, if I want to do a deal on a public listed market, it's going to cost me about $250,000, right? I agree with that, but OTC, that's pink sheets over the counter. I used to work with companies that would literally list for like 10, 15 G's and just go raise some capital. So I don't know whether I agree with those numbers. I do understand in London that's different.
Yeah.
But I guess
so
ultimately is you have like a target, sort of almost like an envelope of accredited investors all ready to go, right? And you're just chomping at the bit waiting for ideas to be presented to you?
Yeah, absolutely. So, we only take, of our applications, we take on less than 10% to actually do a follow-on call. So we get a lot of applications. But it turns back to the reason why Bank to the Future was founded in the first place. And that is that we wrote a book called Bank to the Future. The book was forecasting disruption of banking. And we wanted to be diversified across the entire sector of anything that might be involved in disrupting banking. So we created the online investment platform for other investors that shared that same belief that over the next 10, 20 years, banking is going to be disrupted in a major way. And there's going to be, a multi-trillion-dollar sector created over the decades. This is a platform where you can build a diversified portfolio, because most of the companies that list on our platform will fail. But if you believe in that philosophy and you're diversified, then you might be profiting from the disruption of the sector, and that's kind of.
Can I ask you sort of a philosophical question?
Yeah.
Does it really make sense for people to be investing in these coins if people like Ethereum come out and say, and correct me if I've got this wrong, but if I understand correctly, I think I heard the Ethereum developer once say that he didn't want the price of his coin high, because then that doesn't make using his network actually competitive. He would prefer the price of his coin to be low.
You've touched upon the key point here. Here's the key point. In order to be legal and compliant to sell a token, it has to have a user case. If it's for raising funding, our legal opinion says that that's not legal. It doesn't mean you're going to actually get caught, or you may, or there'll be a crackdown, or however the regulatory market is about to unfold. As soon as investors like the DAO, the best thing that happened to the DAO was it got hacked, so they could reverse everything. Investors were made whole. They got their ETH back, and luckily, but the SEC were on that. They were ready to pounce. The next time that happened,
these video game companies that are suggesting that their coin is going to be used in the video game to buy a better gun or whatever. That's like an actual physical use scenario.
Yes.
Right?
Now that is a physical use scenario, but if you go on the forum, there's only one reason why people are investing. Maybe less than 1% want to use it for the video game. 99% want to make money. And so really, even though you are saying this is what it's for, it's become a security because people are saying, okay, this might be worth more if you succeed. And therefore, at some point, regulators are going to get involved in that process. Now, you could do that like Bitcoin in a fully anonymous, decentralized way for open source projects where no one knows the founder. And that's a user case that you might do it. But if you're a company with your face on it and you're Vitalik saying, hi, I'm the founder of Ethereum. And yes, people might use it for smart contracts, but if 99% of investors like myself just invested for speculation, then there's a real contentious issue there that's going to come. Now, if Ethereum turns out to be a blockchain that's about to explode, I'm an investor in Ethereum. I speculated on that. But if it turns out to be and everyone loses their ETH, or whatever happens, that doesn't really often happen, but the value can drop significantly. So you've got an issue there.
For whatever it's worth, I made the thesis. I worked in the stock market for 20, 30 years. And what I've noticed is every single cycle, here goes Alex. Sorry.
I've heard the story a number of times.
All right, now let's finish this one quick sentence.
I haven't heard it.
Every cycle ends in a disaster.
Mm-hmm.
If you think about WorldCom, I don't know whether you remember that. Nortel Networks, for example, right? Where is Nortel? It's gone, right? There are a number of every single cycle it seems to have a disaster, and it's after the disaster, just like you said, the regulators will come in after everybody loses their shirts, and that's when we get regulated into the ground.
Yeah,
so
regulators.
I totally agree with you on that.
Yeah, regulators, with the exception of the SEC, which is very aggressive, most regulators are passive in the if something new comes along and investors lose a load of money, this is a headache for them. This is more paperwork on their desk. This is something, you know, that's annoying. They make money out of fining banks, and banks commit crime. They create 15 trillion of crime. Billion. The regulator fines them 2 billion, and JP Morgan's happy. The regulators are happy. But when investors lose money, and you know, this is a headache for them. There's no regulatory business model in that. That's just when they're focused on consumer protection. And so, you know, at that point, it's a headache for them. But regulatory intervention is always investor driven. So the investors demand it. So, you know, that's what tends to happen.
It sounds like
the other really important thing, one more important thing on the ICOs. Every ICO that I know of, and I'm probably, you know, stopping the market for this happening, has approached me or someone that I know and said the following: have you got a lot of Bitcoins? If they can answer yes to that question, they'll say, can you invest in my ICO? And I'll give you the Bitcoins back after, and you have the free tokens. And the reason that an ICO raises 10 million in 15 minutes is because already 5 million is preloaded with free orders. Now, the interesting thing is, what do they then go on and say afterwards? Oh, it's all on the blockchain. Check the blockchain. So they can check the blockchain. And the really interesting thing is that, okay, yes, the blockchain introduces a layer of transparency. But because for security, the identity of the people either side are anonymous to protect the security of the network, there's a new manipulation that comes along. And that is something like that. And then what do you do? Well, the end of that is actually, if you go to a platform like Bank to the Future, our neck is on the line. We're registered with the regulator. We have to conform to certain processes. We can't allow action like that to actually happen. We have to know who the people are. We have to have done the KYC. And so interestingly, the blockchain was the solution for transparency, but then there's a new manipulation which requires regulatory intervention, and it ends up going full circle. So, you know, these ICO numbers, I do not believe hardly any of them, which is why I was really interested in the Zcash launch, because they said, you know, screw the ICO, we'll create a company, we'll get a percentage of the mining as this progresses. And then, but now that that leads to the speculative market that we've created right now, where there's actually no sellers in the market and only bids. So we've now got a coin that's apparently 20 times more valuable than Bitcoin that no one can use yet.
I heard about a similar sort of hot potato financial system with like green energy sort of fraud subsidies in Italy and the EU, where the EU had subsidies available for like green energy, new sort of production. So the mafia were like moving money around these shell companies that was, like one of the stipulations was that you had to show you had X amount of cash. So they would just move the money and say, oh, okay, yeah, we're gonna build these wind turbines, please give us our subsidy. And then they would like get the money, move all the cash to the next shell company, pretend they were gonna build a wind turbine somewhere else, and just kind of hop around. And you probably see the same thing with these ICOs, where like there's all the same money moving around.
Yeah, and you know, another challenge with these ICOs, for example, take the DAO. The DAO, you know, if it had succeeded, promised all of its so-called token holders that weren't their investors that they would be distributing percentage of the income that comes from investing, or not investing, buying digital tokens in these startups. There's a reason why we don't give, you know, a lot of the companies on our platform don't pay dividends until they're profitable. It's because startups can't pay out income. They need all the money to develop in the process. So that would have been one ginormous disaster, where all of your investors, you know, some of them are 15-year-old kids that have made money in Ethereum. They want 6,000% returns in 2 seconds, and if you don't give it to them, that you're a scam. And they've invested, you know, 10 cents, and then they scrutinize you all over the forums and all over the internet because their 10 cents is now worth 5 cents. You know, you get all these problems every time the market crashes. You get accused of all sorts of stuff. It's a really, really difficult way to run a company. So there's real consequences when you do it.
Hi, okay. So I'm just Joe Sixpack. I'm here in Canada, and you sold me. I want to do a deal with you. So do I come to your site and register and cut a check to you? Where does that money go?
I have a follow-up question to that.
So,
how do you prove you're an accredited investor? Like, what does that process look like?
Yeah, so on the way in, you do a self-certification. We give you the definitions. You self-certify that you are which type of investor you are. Depending on your jurisdiction, it will have a different definition there. And then you self-certify on the way in. In the closing process, we may need to do some additional certification process depending on your jurisdiction and where you have to prove a little bit more. Or depending on another jurisdiction, you might just be, for example, in the UK, a sophisticated investor is someone that understands the risk. You can go through a quiz to understand the risk. We'll put you through that quiz. And then you have to agree that it's less than 10% of your income, and you get financial advice and just various things. So each jurisdiction has their own definition. So it's not worth going through them all. But in terms of the monetary flow, so we have a different number of flows. You can invest with altcoins, you can invest with Bitcoin, you can invest with fiat. In terms of fiat, we have an escrow account and a third party where what happens is you pay by card or bank transfer. The money goes to the escrow and it sits there and will be transferred direct to the business bank account of the company only once the shares have been issued and the legal due diligence is complete. In terms of Bitcoin, they'll go into a cold storage multi-signature wallet. And we don't convert them via BitPay or anything like that, because if the pitch doesn't reach its funding goal, you get your Bitcoins back. And rather than you getting dollars back or something like that, you get the same amount of Bitcoins back. If the pitch reaches its goal, then those Bitcoins, once the legal work is complete, are then gone to the company's wallet. And in the case of altcoins, we just shapeshift them all into Bitcoin because no one wants a bag of shitcoins.
Right, so great. I just bought a deal through you, ABC Company. This is a private company. I'm here in Canada. Turns out they're out of Singapore or something, and the deal goes belly up. Do I come after you? Do I go after the company in Singapore courts? What's your... All right,
well, so,
this is the scenario if the investment idea doesn't work. Yeah,
so we put all of the investors into one SPV, and you get shares in that SPV. And that SPV is a Cayman Island SPV that does nothing but hold shares on behalf of investors. Then the pitch goes into post-funding, and all the investors have a forum where they communicate with the company, and the company has to provide their quarterly updates, and then people can ask questions from there throughout the forum. If the company goes bust, the company goes bust. It's risk capital. If you think that there's actually a legal wrong misdoing, then you need to go through the process of suing the company. Or if you think BnkToTheFuture has missold something, then the same process as proving that.
Where's your jurisdiction?
The actual contracts and agreements are all done with Cayman Island, but we have a multi-jurisdictional, so we perform different functions in different jurisdictions, depending on the regulatory framework in those jurisdictions. So like payment processing and admin is done with a different jurisdiction, but the actual investment agreement is with a Cayman Island entity via a Cayman Island company. And
there's no conflict of interest between being the facilitator and the underwriter?
We don't underwrite. We just simply list it on the platform, people. We then act as, in a sense, nominee to the shareholders, they get the company gets one shareholder, so it doesn't prevent them raising further funding in the future. And then if a VC wants to come and invest in their Series B, then they just need to send one term sheet, and we make sure that things like the legal rights, like preemptions and drag-alongs and tag-alongs, are actually administered because they negotiate direct with the SPV.
Okay, so like we were just bantering here. We're kind of, are you like the New York Stock Exchange kind of idea where you want to be the intermediary, or are you the underwriter who's bringing to the table these deals?
Well, I guess you could take your pick from that, really. So we're just simply, we're an online investment platform. We have a community of investors. We put together an SPV that every investor can invest in, that will then get exposure to the equity of the company. We then hold those people, log into their BnkToTheFuture account. They can download their share certificates. They can view the legal documentation. They have a forum for communicating with the management team. And then the company just deals with us in order to actually, do the nominee of whether they're actually issuing new shares and things like that. And we make sure that the rights in the term sheets are being executed and the investors aren't getting shafted by the next VC.
All right, I don't mean to be a pain. Thank you for the answers. Awesome.
Thanks for the questions, Brian. I'm a little curious about dividends. This is something that always kind of makes me ponder in the crypto space. If you have these, low fee, no one can really extract wealth from a lot of these peer-to-peer systems. How are these companies earning a return to be for profit and in turn have dividends for their shareholders? Yeah, so
in most cases, if you want dividends, do not invest in a private company. If you want income, there's a lot better ways of earning income than investing in a startup or an early stage company. You invest in an early stage company for capital growth, and the way you achieve that capital growth is in an illiquid long-term market is by diversifying widely across lots of different companies in a sector you're looking to get exposure for. In terms of dividends, if you look on our platform, we have different types of pitches. So we have pitches that, for example, we just launched a Zcash mining pitch. That's an SPV that all it does is it mines Zcash. It doesn't do anything else. We will pay our investors a dividend every day in the form, backed by whatever the mining of Zcash actually produces. And that's where a lot of the daily dividends are coming from. It's not coming from startups. We have done interesting things. So, for example, a company called BitSpark, they are doing remittances in Southeast Asia. And we, as a bonus, for every amount you invested, the earlier you invested, we gave you some Bitcoin hash power as a bonus, for example, so that you could start experiencing and receiving some Bitcoin. It was just a thank you to investors that invested early, but it creates an interesting user case for mining, where an investor can invest in long-term equity, and then we'll give them a bonus of some hash power, and they gain some Bitcoins. They learn how to use Bitcoin if they're new to the sector, and they start becoming comfortable with using Bitcoin, because I believe that Bitcoin is going to be a store of value for the ultra high and wealthy in the future, as well as a game changer for those that don't have access to financial services. Another example is the final example I'll give you is we were involved in the recovery plan for Bitfinex. And we allowed for token holders to convert their BFX token that they were given as a compensation for the theft of the hacker that stole the funds from the exchange. They actually were, they actually paid out a dividend. So what we did is we did an integration with Bitfinex where the dividend was paid. And it went direct into their Bitfinex account as US dollars, because it's a US dollar denominated company. And then they could, if they're from anywhere in the world and they don't have the ability to receive US dollars, they can just trade out in the exchange for Bitcoin. We've got interesting cases like that. That's where the dividends. But the main reason people are investing is because they believe in five years' time, There's going to be a lot of merger and acquisition activity in this sector. A lot of these, they believe that some of these companies are going to be acquired for many times what they invested, or they're going to float on the stock market many times multiple of the funding round on the platform. And so capital growth, long-term illiquid capital growth is the name of the game. If these companies become cash cows and they become profitable, then they might pay dividends. But if you want income, don't invest in private companies.
Okay, cool.
Okay, so 2 questions. Number 1, you collect a fee on all of these deals done. Is that how you get paid?
So yeah, our revenue model is we get 5% of funds raised from the company, and 5% of any dividends paid charged to the investor, and 5% of any exit proceeds. So our goal is to build a large portfolio in this sector. Our interests are in line with the investors, where if we can get these companies to go public, be acquired, or do some kind of innovative blockchain IPO, whatever the future holds, then we get a 5% cut of any dividends or exit proceeds.
And then the second question, and I think you sort of answered it earlier. These companies, it sounds to me like ultimately the goal is to become public and this equity to be monetized. And I guess the second question to that is, do you do things like warrants and those kind of sweeteners? Or do you just do that hashtag kind of, or hash power kind of sweetener you were talking about?
Yeah, so we take every deal as it comes. So Kim.com did some warrants. He did some anti-dilution warrants. So each deal is kind of different, and we upload the legal docs and try and condense it into simple terms, and provide a forum for people to ask questions. So each deal is kind of unique. We do have a cookie cutter process, but we also add a unique element to many of the deals.
And is there like a hold period?
What, in terms for the directors or for the investors?
The deal is individual, right?
Yeah.
But when I was floating paper, this industry standard is like a 4 to 6 month hold. I would assume that your deals probably have something similar to that.
Yeah. Well, this is illiquid private equity. These companies are nowhere near going public. We're anticipating the ones that do go public, it would take 3, 5, 7, 10 years to go public. So there is no secondary market at the moment. We very much looked at the secondary market, but it's the technical challenge is the easiest part. Creating the technology for a secondary market is very easy. The compliance, we figured out how you can do that. The hardest part is creating a fair market, because the reason that regulations exist and insider trading rules and all these things exist is for that exact reason of preventing what happens in the altcoin market, where you're pumping, dumping, the founders of the pre-mine are selling to the investors, all the activity that happens in an unregulated altcoin market. So the hardest part of the secondary market, for example, if you're a new investor, you have the least amount of information. If you're a previous investor, you have slightly more information. If you're an employee, you have way more information. If you're a director, you know stuff that no one else knows. And so how you create a fair market with those is what we've been considering before we even consider launching a secondary market, because the last thing we want to do is create a market where directors are exiting their positions in just like they are doing in the altcoin market, and then you end up with a dying stock. So the fair market is the hardest part.
That's why there's insider ownership reported in the secondary markets that you referred to, right? So we can actually judge what the people that have a vested interest are actually doing with their money. So I do see that this is a very immature market. It's got a long way to grow.
Absolutely, yeah.
And I know this year we actually saw one of the first blockchain companies being listed on a stock exchange. It was on the Canadian TSX, Blockchain Technology Incorporated. I believe.
Yeah, I know the guys. Yeah.
Yeah, I think that's where Taylor's working at the moment. I'm not sure. Is that that guy's company?
Yeah, that's my company.
Yeah,
Yeah.
Guy from London.
Yeah. Same one.
Yeah. Now, to me, my personal opinion, if you look at, so Coincilium went public with a similar model to blockchain tech, and we were actually involved. I'll tell you a story about the IPO we were going to be doing in Australia, which is an interesting story. They went public. It's just not a cost-effective way of raising finance. So Coincilium raised like 2 million, let's say 3 million. Maybe I got the numbers wrong. Please look it up and check it for yourself. My guess is that they paid like $250,000 to be in the position where they were doing the correct prospectus and disclosures. Now on Bank to the Future, you could have raised that in like, you know, in such a different period of time with a different cost structure. And so going public is just, I just don't see that model working. I don't know why a blockchain company would go public, personally. Let me tell you the Bitcoin Group story. So Bitcoin Group is a really interesting story. So they're a mining company, and they were mining before, you know, was it about a year ago when the Chinese mining just really pumped after it bounced back from the $180 mark. They were looking to IPO, you know, when mining was an industry, and they were a profitable mining company. And if you look up Bitcoin Group, you'll probably see about 5 or 6 versions of, hey, we're about to go listed on the Australian Stock Exchange tomorrow or the next thing. So we were involved in that because what we did is we actually raised a chunk for the IPO via one of our SPVs, so that they you know, had more for the IPO. Now, the regulatory process almost, you know, it was so slow, it took like 2 years, that the whole opportunity had disappeared in the time that they were just trying to get it listed. Now, the interesting thing is that the way that, my opinion on how the regulators were doing this is they kept giving them the green light. They got the green light, and then they go on CNN and announce the IPO is happening. Guess what? We're going to be the first Bitcoin mining IPO. And then the next day, just before listing, they'd throw a hurdle right at the last minute saying, oh, we now need to, you know, you need to do a model of what happens when Bitcoin's halve. And like, right, okay, we've got a model of what we think will happen when Bitcoin halving, but no one's going to create an accurate model, and we don't want to missell our investors, because really we just want to say anything can happen. But you're requiring us to model it, and this model will be very bad, and it will be misleading in our opinion. And then they're like, okay, so do the model. They do the model. Okay, the IPO is happening. We're about to launch tomorrow. Oh no, we need the model audited by a top 4 auditor. So you've got to try and find Deloitte or Grant Thornton or KPMG to audit a model on what will happen to Bitcoin halving. You end up consulting them on how Bitcoin works. They then build a whole division about how they're Bitcoin experts and blockchain experts, and sell to IBM and all the banks around the world, making a ginormous revenue stream. Pitching this whole blockchain concept, scamming all the banks into blockchain, because blockchain does nothing for banks apart from disruption. Anyway, I digress. And anyway, so the final thing is we got it where, and then we raised funding. And what we do on our normal rounds is we keep the Bitcoins in Bitcoins just in case the deal doesn't come through. Well, the regulator said, sorry, no, you have to transfer the Australian dollars into this escrow account before you can do it. So we had to convert the Bitcoins, put them in Australian escrow. Bitcoin price went through the roof after that. And then the very next day they said, sorry, we're pulling the IPO. After making us convert the Bitcoins into Australian dollars, hold them at their escrow, and then they took months to try and get the funds back. It was just, you know, just really, really processed. Now, then they got to the final stage. It was the done deal. They had legal counsel. You know, the prospectus was there. They'd raised the funding. The investors were excited. We're ready to go live. the final hurdle is they said, no, you have to wait till after Bitcoin halving so that we can assess the market and what happens next. The very next day, they announced, oh, the Australian Stock Exchange is going all blockchain, and Blythe Masters is helping them build an Australian stock exchange in blockchain. My opinion, they were blocking anything to do with Bitcoin and trying to focus on the blockchain stuff, which is ridiculous, by the way. Sorry, putting the Australian Stock Exchange on bearer assets where you have to hold the private keys and someone can steal your stock is stupid and just a really bad move. And it provides yes, you might get a technological increase in efficiency, but it's not technology that slows things down, it's compliance that slows it down. You could create the exact same technology without using a Bitcoin, without having to burn a blockchain, without having to burn loads of money on proof of work. I was in Jeffrey's investment bank. They asked me to speak at this, and they were the usual suspects, the IBMs and stuff. And they were telling me about this 150 proof of concepts they built with all these large corporations. And I was saying, sorry, if you're not doing proof of work, then the blockchain does not provide security. So you can't just say because it's a blockchain, it's secure and everything's open and trust is there. No trust is needed. I said that's the case with the Bitcoin blockchain because it uses proof of work, and you need proof. The only reason you have proof of work is because you've got a bearer asset, and that eliminates counterparty risk. The only point of that is to eliminate the intermediary. So there's no point. Blockchain doesn't improve this whole process, and I think it's going to take them ages to realize this, or not so long, probably in the next year or so, that actually Bitcoin blockchain is about disruption, is not going to help your business model in any way, shape, or form. And the reason that people have registered securities and assets and registered things is because banks don't want transparency. They want the ability to reverse transactions. They want the ability to change things when they've got the register wrong. If they wanted transparency, they could have it. They don't need a blockchain in order to achieve it. Sorry, I just gone on a bit of a rant as well, but it's just, I find it so funny that all the VCs have stopped investing in Bitcoin companies. They're now investing in blockchain companies. And that's all going to go full circle because Bitcoin is a big disruptor. And the technology behind it is bloody open source. I could create a Bitcoin tomorrow. The proof of work behind it will never be replicated, or we might get something like Zcash come along that takes some of the hash power and creates another secure blockchain. But sorry, ranting. Where were we? What was the original question?
I can't remember, but what do you think about the ETF being constantly delayed? Is that kind of in the same school of thought, I guess, that they're basically trying to keep it off the exchange?
Same thing. Few opinions on that. Firstly, I really wish that ETF happens. I just spent the last 6 months having one-to-one meetings with pretty much every fund manager that's managing most of the money in the world. I went to London, Hong Kong, Tokyo, Singapore, San Francisco, New York, Deloitte. Why do I always say that? Boston. I had the honor of being, taken around to just sit in front of fund managers that are investing lots of wealth in most of the money's world and speaking to them about Bitcoin and blockchain. And they really want an ETF to invest in because I'm explaining to them, by the way, the whole point of Bitcoin is that you can eliminate counterparty risk, but the cost of it is that you need to learn to secure your private key, and it's a bearer asset. And so as long as you can secure your private key, then you can gain exposure to this asset. And they're like, yeah, but we wouldn't know how to do that in a compliant way. Therefore, we need an ETF in order to do that. So what the regulators are now doing is they're saying, okay, if you're a fund manager and you want to invest in this sector, you must invest and introduce counterparty risk to the equation. You must do things that just don't make any sense whatsoever. But if that's the vehicle we need to get institutional money into the sector, which I believe is vast liquidity is going to come in the sector from the institutional side. That we, in my opinion, we're only just seeing the beginning of some of the buy demand in Bitcoin because we got the first user cases. When you get the institutional money coming in, so the ETF, it's delayed. Why? Firstly, there's so many issues. What happens? Are you taking custody of the private key? Who's the custodian? Is it Coinbase the custodian? How do you know their security is right? What happens if the Bitcoins get hacked? So many questions they must have to answer. And then another interesting question, which I saw on another show, is that once they launch the Bitcoin ETF, who says that you won't then get the Ethereum ETF, and then you get the Steem ETF, and then you get how far down do you go in the chain of shit coins for these ETFs? And then suddenly the regulators have to become experts on due diligence of altcoins to try and determine which ones are scams and which ones are not. Or you need to have a bar. And where do you set the bar? Okay, Bitcoin we allow. What about Ethereum? When does Zcash become okay? You know what I'm saying? It opens up this ginormous headache. And it is a silly market, really. Why you would introduce counterparty risk in order to invest is just a headache from legacy regulations, really.
No,
sorry to interrupt. How do you look at the CME's listing of the Bitcoin index? What do you think of futures contracts? I mean, I really like the idea that options are going to be introduced on the regulated market. That's what's really got me interested.
Yeah, so derivatives that allow people to gain exposure or hedge risk using blockchain assets and cryptocurrency, great. There's a user case. But I think the more interesting user case is the ability for a fund manager to directly create a swap contract with another fund manager or a farmer using a blockchain asset without an investment bank in the middle. That's more interesting to me. But then the other markets are also quite interesting. But there's what I say to all these financial institutions and these corporations that are riding the blockchain hype cycle right now, is I say to them, blockchain comes with a very large cost. The cost is it's not secure if you're not doing proof of work, my opinion. And proof of work is only secure on the Bitcoin blockchain. And you need to introduce bearer assets. And bearer assets means that you eliminate counterparty risk, which is a great thing. But people need to secure their private keys, which means that if they can't secure them, they get hacked. And that doesn't work in a registered security market. That doesn't work. It only works when you need to eliminate the intermediary and you don't have the register in the middle. So there are user cases of that, like the fund manager to fund manager swap market, swapping exposure. But yeah, I mean, CME, if they create a new market derivative to speculate, great. Let's get the more and more money interested in the sector. It's the reason why Bitcoin is growing, and I'm forecasting will continue to grow. And it's just in a really high risk environment. It's just such a unique asset class. We've never had an asset class that acts like a commodity because it's got a fixed supply, that acts like a stock because its value is directly correlated to the utility of Bitcoin, that acts like a currency because there's a payment system you can transfer value anywhere around the world, that also acts as a technology where you can build bank in a box on top of it, that also is a protocol. We've never had an asset class like that. And I don't think we will get many more of those that have the proof of work network effect behind them that allow them to work.
You got to factor in how annoying it's going to be when everybody on the internet, every time the price goes down, claims about naked shorting and the paper Bitcoin market. Like, it's kind of a relief that we don't have all those products right now, because once that sort of gold bug crowd comes in, it's going to be unbearable.
Agreed, but it's inevitable. And that's I think where we're heading. Look at the Zcash market right now. They were pricing those Zcash futures using the BitMEX exchange, and that really is what drove a lot of the interest and speculation into the market where we are now. So it's innovation without permission means that it comes with that. Anyone can innovate on top of it.
So I'm curious, Joe Sixpack, don't understand this stuff, but I'm really interested. I've got some money to invest. Where do you think equity investing. Where do you think this space offers the most growth? Like, what do you think this is, like, where, if I was just an accredited investor, didn't understand crypto, but came to you and said, where's the growth potential from the equity side in this space? Well, what would be your recommendation? I'd really want to know what's inside that head of yours.
Okay, so firstly, I tell you, unfortunately, we're not authorized to give investment advice. So we wouldn't give you advice. And we just provide the deals and the ability for you to do due diligence. And we make sure that there's technology that we can be reasonably confident that you understand the risks, and that you know that there's a huge downside to this. That's what we do. If you're
no specific.
yeah, if you're speaking to Simon Dixon,
right?
if you're speaking to Simon Dixon, asking me as the author of Bank to the Future where I think the sector's going, then here's my investment thesis that I started investing in. I think the VCs got it all wrong. What the VCs did, and I remember when I went to the first Bitcoin conference in Prague, and there was a little startup from a guy called Tony Galippi pitching his concept called BitPay. When he secured his funding, and then he was one of the first to get the VC back in. What the VCs invested in was the mid-market. Let me explain that. I see Bitcoin having utility in three markets. Firstly, the underserved. The underserved also means the first user case of Bitcoin, which was allowing for buying drugs online, casinos, all the companies that couldn't get access to merchant services. That was the first user case. That provided the liquidity, and that was a part of the story of why we are where we are today. The second user case, which hasn't materialized yet, but I believe will materialize in the next 5 years, is the underserved. So bringing the cash economy into the global markets and digital. So I spend a lot of time in Southeast Asia. You go to Vietnam, they don't trust banks. Visa's pitching like they're Bitcoin when you go to Vietnam. I was at a Bitcoin conference speaking there. Visa was next to me, and the audience were more receptive to trusting Bitcoin than trusting Visa, because they want to hold their cash. They like their cash. They don't trust banks. Banks is like, it's really interesting when people talk to me about, well, why would I trust Bitcoin? Why would I do that? I go, well, you don't, and they say things like, I have to hold my money to believe it's real. I just say, but when's the last time you held your money at a bank? There was a moment in time when a bank came to you with your wad of cash and said, hey, I got an idea. Why don't you give me all your cash and put it in the bank? And you would have said, are you crazy? Why would I do that? And that's the same situation as Bitcoin right now. People think you're crazy. Why would you do that? But these cycles have been through. But anyway, yeah, they trust cash. So I believe, and that's where I focus a lot of my attention. That's why we invested in Uno Coin, the largest exchange in India, BitPesa, the largest exchange in Africa, Bitso, the largest exchange in Mexico, which has a direct integration with the central banking system in Mexico. And these types, and BitSpark, remittances in Southeast Asia. We missed the coins ones. We really wanted to get in the Filipino round, but we weren't invited, unfortunately, the Filipino exchange. So I believe that those user cases, the underserved, have tremendous potential with Bitcoin, blockchain, whatever you want to call it. I also believe that the reason that I got involved in Bitcoin in the first place was a hedge against bank deposits. I believe bank deposits are very risky assets. I believe they're propped up by a scheme that has flaws, and that was what my original book was about: the 3 problems in banking and why your bank deposits are risky. Before Bitcoin came along and solved some of those problems for people that want to diversify. So I believe the ultra wealthy, in an environment of negative interest rates and risky banks with systemic risk, that will bail in the most wealthy customers, they're going to be holding a lot of their wealth in gold, in commodities, in precious metals, in art, in cash, in a safe, and they're also going to be using Bitcoin and blockchain, and they're going to be owning their own private keys. So I started investing in a lot of so for example, we invested in Exodus. Exodus provide what I believe a really great wallet that I can recommend to fund managers, where they can own their private keys, have a backup functionality, and own their private keys securely. So anything that serves those two markets, you've got the underserved, the ultra poor, or the people that aren't served by merchant services. Then you've got the ultra wealthy that are going to siphon a lot of investment into this sector. The middle bit is where all the VCs started investing, BitPay, merchant processing. Now, I believe that all those businesses will do well only once all the poor people have Bitcoin and all the rich people have Bitcoin. Once the poor people and rich people have Bitcoin, they're going to want to spend it. And there's the middle market. Now, all the VC funding went in the middle market. Then they got bored because the middle market didn't mature. I believe it's because the underserved and the rich didn't have time to go get those assets. So what happened next? The VCs got bored. They started telling all their banks, investments, and financial institutions about blockchain. Banks then re-engineered the word Bitcoin to a compliant, socially correct word called blockchain. And they told the whole world about blockchain. Brilliant, thank you. The best PR marketing strategy for Bitcoin I have ever seen. Because then all the fund managers, when they were all being told about blockchain, and Blythe Masters comes along and tells all the fund managers in the world blockchain's the future and disruption for everything, all the fund managers go and start doing their research and due diligence and realize Bitcoin's the only blockchain that works. And so I know for a fact that they were all going back to their private accounts, buying Bitcoin, driving more buy volume and more liquidity into the market on their private accounts. They can't do it with their institutional money yet because of compliance, but that's a matter of time before it comes. And now we're starting to see, I believe, all the fund managers came along in the next year, and then they all built 150 proof of concepts. IBM, KPMG, Deloitte, Ernst Young make a load of money telling all the corporates about these blockchains. If you launch a blockchain today without proof of work, you're going to get hacked. You're going to introduce bearer risk. You're going to introduce a massive cost, and it adds no value to the financial institution in almost all cases. So eventually they'll take those user cases and they'll either secure it on the only blockchain that works, Bitcoin, or they'll just scrap it and say, actually, we don't need a blockchain. We're going to build a distributed ledger and a database that's actually, there's existing technology that does that a lot more efficiently. And that's what's happening right now. R3 saying we're not a blockchain company, we're now a distributed ledger company, which has got nothing to do with blockchains. So, but where we are right now is we've now told the whole world, all the corporates, all the banks have told everyone about blockchain. They've put a stamp of approval on the sector. And that is driving tremendous wealth into the Bitcoin sector. And so my forecast is that once we get the underserved, the wealthy are going to be the first user case. Once we can get the underserved in, then the middle market matures. So our job at BnkToTheFuture is, I think that will take 5 years to roll out. Our job at BnkToTheFuture is to provide liquidity where the VCs aren't investing right now because they're all interested in blockchain, and I believe they backed the wrong horse. But they will come back around. And so, you know, that's my investment thesis. There's one final element to that. And that is what's happening on central banks right now. Central banks, now many people, if you speak to a Bitcoiner, because they're coming from the world of Bitcoin, they think a central bank digital currency, what a load of crap. It's just a shit version of Bitcoin, which is what I would think as a Bitcoiner. But as a banking reformer, as someone that got into this sector because of understanding systemic risk in banking, I know what a bit of central bank digital currency means. It is banking reform on a scale we have never seen before. I'll tell you why. A digital currency issued by a central bank versus fiat, and by the way, fiat, unless it's cash, is a digital currency. It's all backed by debt. It was created by the private banking sector, and they had the ability to create digital fiat every time they issue a loan. So the entire sector is indebted in order to create digital fiat. So think of lending market as the mining for digital fiat. And your money in your online banking is not cash. It was created by somebody else taking on a loan. And for every penny in your online banking, somebody else had to go into debt. So the mining was debt. Now, what that has caused is an almighty systemic risk in banking, as we saw unfold in 2008. And QE was used, which is another debt market, in order to save the system which has just propagated another Ponzi scheme, another problem, in my opinion. Now, what central banks are doing is they looked and said, look, bail-ins. So you know, if bail-ins happen, that could lead a run in the bank, you know, or we could try and prevent it through bail-ins. The government are completely indebted. They're completely broke because they've outsourced the money creation sector to their central banks for cash and private banks for 97% of the money. So they're broke. And so therefore, they're not going to be able to do the next bailout. So what can we do? Okay, we've got no interest rates. Interest rates are zero. We need more seigniorage income. Every central bank is insolvent right now. They've taken on tremendous toxic assets, and so they need to create new asset classes in order to fund their liquidity back. There's only one solvent central bank, and it's the IMF. And the IMF have created their own digital currency called special drawing rights, which is the world currency that could compete with Bitcoin in terms of where people use on a global currency. Now, when the central banks are all technically insolvent, they have to find a new form of money supply when systemic risk, and the next systemic risk happens in banking. Well, if you're in Canada right now, you can download CAD-Coin, I think it's called. I did it with, when I was in Canada, I did it with one of the guys. He downloaded the app, he entered his social security number, he opened this app, he put his bank clearing Canadian banking number in, and they said, would you like to buy some CAD coin? Each CAD coin, or whatever the coin was called, correct me if I'm wrong, I just saw him do it, was worth $1 Canadian. Now, what I watched him do is buy 1,000 CAD coins in exchange for 1,000 Canadian dollars. It went on his wallet, which was created by the Canadian Central Bank. What has happened in that transaction? Now, you as a consumer might think you just bought some CAD coins and you put it on a wallet. What you just did is you took your $1,000 of debt-created private banking money and you swapped it for currency that the central bank issued directly. And the central bank can use the bank-created money for either some kind of collateral in financial crisis, or they can extinguish it gradually, which means that central banks are waging war on private banks. And then if you want to, let's say, for example, there is systemic risk and a bank collapses, the Canadian Central Bank, or the bank that's got a digital currency, can swap all of the deposits of that bank that's about to go bust, and you can be made whole with Canadian Central Bank money that reduces the private debt created money supply, replaces it with central bank money supply, and now you've got central banks engaging and waging war on private banks. And you've taken out some of the moral hazard because they're allowed to go bust. They're no longer too big to fail. Now, there is problems. There's challenges with that. Firstly, what do you need in order for a central bank to create a digital currency? Well, you certainly don't need a blockchain. A blockchain, they don't want an inefficient proof of work that disintermediates the central bank and creates bearer assets that people have to hold the private keys or they can get their money stolen. They just need a digital ledger. And all they're doing is they're replacing retail bank debt created deposits with central bank deposits. And then what do? They introduce an API key. So with that API key, FinTech companies can now build financial services on top of direct integration with central banks, just like Bitso has done, the Mexican central bank, integrating their service so they can direct clear without a bank in the middle. Now, those API keys can be used by other fintech companies that are building on top of Bitcoin and blockchain assets, and you can have a fully interchangeable market. The IMF create their special drawing rights. So what might end up happening in the end, if we take this out to our 10, 15-year forecast, you might end up being in a scenario where you choose, do I want to hold my money in digital fiat? Digital fiat is issued by the central bank. They gain control to my funds. If they think I owe them money, they'll just take it. If they don't like what I'm doing, they switch my account off. And they don't even have to go to court to try and get the records off the private bank. I'd rather my money be with a private bank, as much as I hate them, than with a central bank. That's a scary proposition, a really scary proposition. But so not many people, digital fiat is not, but what does digital fiat do? Well, it allows you to buy everyday goods. The farmers, that when you want to buy your strawberries, they're going to take fiat. They're more likely to open a Singapore dollars wallet issued by the central bank than a Bitcoin wallet. So digital fiat will have its use in that you can spend money in the jurisdiction or the country where you're at that moment, but you will limit your exposure to it because you know that that's risky money that the government can just take at any time or directly integrate for automated tax collection and all those types of things. So, sorry, this is a really long answer, but let's tie this all together now. Central banks will issue digital fiat currencies. FinTech companies will build on top of them. That leads to complete disruption in banking. The catalyst for that will be the next financial crisis, systemic risk. And now we have a full safe plan. More and more people will be interested in Bitcoin because they realize there's only one currency where you can transfer value all around the world, but you have to take volatility risk. If you want to eliminate volatility risk, you have to trust a counterparty like Uphold, one of the companies we invested in, that allows you to hedge it, take counterparty risk, but store it in the price of US dollars. Or decentralized solutions and derivatives contracts will come along and create hedges where you can hedge your exposure risk. This is going to take 5-10 years to play out. But once you have that, you have central bank issued digital fiat. You have digital cryptocurrencies which have privacy embedded in them. And people have choice, and fully fintech companies that can fully transport assets and different exposures and counterparty risk all around the world. All of that is bad for banking. And so that's my thesis. If that happens, and you might completely disagree, that's the best case scenario of where I think we could go. And I want to be invested in everything that might be a part of that in a very diversified way. And that's really what my Simon Dixon advice would be. You could call me a delusion, you could call me crazy. That might be crazy for many people to understand. But when I was sitting there with people, fund managers, managing most of the money in the world, and telling them that story, and then telling them the story of Bitcoin and how it all came to be, they were extremely interested in how they're going to adjust their portfolios.
They took the blue pill then.
Well said. Well said.
No, that was a fantastic story. Thank you so much for that, Simon. Now, we have a little tradition on the show here where we do a little more of a narrow scoped forecast of Bitcoin. We actually try and predict the price of Bitcoin in 1 week's time. So here I got the chart pulled up. I hope you see it. Looks like we're on the Bitstamp chart. We're just creeping up on $700. Apparently, Coinbase just broke $700. Bitcoin does not know how to turn down for what. So, Simon, what do you think it's going to be in 1 week's time?
Okay, so firstly, I really stay away from short-term speculation. I used to be a market maker on the London Stock Exchange, and I know what's involved in these short-term markets. So I try and stay away from short-term speculation. I've moved from trading to investing. But as a technician, if you're asking me to put some lines on that chart, it's a very clear bull market, and shorting against a Bitcoin bull market is always a bad idea. So it looks like we're approaching that overhead resistance when we hit the high point of about. Is that how short is that? What time frame have you got there?
This is a 1 day here.
Oh, right, that's 1 day. So yeah, it hit that 700. I think we're on a bull market. I think we can pass through 700. I love the way Bitcoin is working at the moment. So we had the shock factor of the Bitfinex hack. We were on a really good bull market before that. And immediately Bitfinex came up with an interesting solution. The market recovered. But what makes Bitcoin work is that there's a genuine reason other than speculation to buy Bitcoin. And that's what's different from every other altcoin. There's user cases for this stuff. So no matter what the price is, there'll be people that are still got to buy it because they've got user cases for it. So, I think we're in a bull market, but hey, I hate short-term speculation. Here's trading in a nutshell. So when I used to be a trader on the thing, we knew that we didn't know where the market was going next. We knew that we could use technical analysis or fundamental analysis to develop a strategy that's right 50% of the time. If you're wrong 50% of the time and you're right 50% of the time, you can still make money as a trader because you just need to make sure that your stop losses are small and you are making the most of every movement up, and you accept the psychological effect that you don't know the market, but technical analysis give clues behind the fear and greed of mass market behavior, so you can develop a 50% strategy. But yeah, I haven't traded for a long time.
Yeah, most people just guess. Yeah, like we don't take this too seriously. Like just if you want, throw out a number. It could be $1, it could be $10,000, whatever you feel like.
Okay, well, if we don't break 700, then it will probably come flat around, let's say 680 or something. If we break 700 and there's good volume on breaking 700, I expect a run up to maybe, let's say 720 and then a correction, and hopefully build some support around that psychological 700 number.
Okay, so you're saying in 7 days' time, November 6th, no, November 5th, you're saying 700?
My birthday's on the 4th of November, Guy Fawkes 5th of November, and then my prediction on the 6th, 700.
All right, good. Now, for another long-winded answer, I'm going to go to Brian Beamish, the rap.
I'll take the gap. So zoom in on your chart.
Yeah. I think I know what gap you're talking about here. This one right here.
Yeah. What's that level?
724, 726.
All right. Throw me in the gap there.
All right. You want to
support on the top of the gap.
726.
I do. You know, that Finnick's gap is like a monster. It's like a mile wide, eh?
Yeah. Maybe if you want to cover, I don't know if we've got time for one more topic, but Bitfinex is a really interesting one.
Yeah, I'd be really interested to pick your brain on that.
Yeah.
I suppose we're running out of time, and Alex wants to shut.
I think they're insolvent.
So, firstly, look, the Bitfinex recovery is very speculative. But then again, I would say, the volume has returned pretty well.
Didn't you say you're on the whack of their coins? The reimbursement deal?
So no, what Bitfinex do that the market doesn't do, that was pretty unique, and the reason that this recovery plan worked is they were able to provide USD deposit holders a very good return by having a peer-to-peer margin lending market where people could lend their Bitcoins and dollars for people that wanted to buy, to go long and short on Bitcoin. So a lot of wealthy people were receiving incredible returns on their US dollars at Bitfinex. And obviously the high returns came with a risk, and that is that there was the counterparty risk that the Bitcoins could be stolen. So when they were hacked, they got the 72 million hacked. They had, and again, these accounts haven't been audited. We're just they're going through that process, but the accounts that they've reported, they were extremely profitable company. They had about $10 million in reserves. And at some points, they were pulling in $2 million profit in the month before the hack. So they were, exchanges are pretty much, in some cases, not all of them, the only profitable businesses in this sector at the moment. Now, when they got hacked and they had the choice of doing what Mt. Gox, look, it was game over. They couldn't plug a 72 million gap no matter what. But the fact that they issued this BFX token to represent, and by the way, I got a 36% haircut as well. So I got interested in this because I was someone that got haircutted. The only reason they were able to do the haircut is because they had the US dollar deposit. So rather than saying you've lost your Bitcoin, they socialized it across all their customers. And then they made the token trade. Now, immediately that crashed to 30 cents on the dollar from people that decided, I don't think Bitfinex has got a chance to recovery. And then BFX became the first user case or the first token that became a prediction market for what the likelihood of returning from insolvency is. And so when the price started going up to 50 and people started speculating, they knew that they were making a bet on the following. Either Bitfinex is going to recover and I'll receive $1 and I invested 30 cents on the dollar and I make a 70-cent margin, not a bad return. Or they knew that because Bank to the Future was doing the funding round where they could convert their BFX tokens to equity, we were doing it at $1 par. So you could get equity in Bitfinex, the company, and you could immediately get your $1 value. And then once they've recovered, they produce some other incentives like recovery right tokens, which gave you additional bonuses for converting. But the point is that their volume is on a nice upward trend now. People are using them because they have a unique product, despite the fact that they hate them in many cases. But remember, a lot of the larger investors aren't the people you see in forums. The people you see in forums lost $10 on Bitfinex or lost $100 on Bitfinex. And I don't want to trivialize that, because to someone that's a large percentage of what they were speculating with or investing in. It's not trivializing it, but a lot of the forum comments are skewed from people that lost $10, whereas the ones that, of the 23 million that we've had converted, they're not the vocal people on forums. They're sitting down calmly, speaking with Bitfinex, talking. Yes, they can afford it maybe, but discussing what the recovery plans are and really having a sensible conversation about whether there's a way of making money. So a lot of those very wealthy people started buying these Bitfinex tokens at 30, 50 cents because they wanted a 50, 60, 70% discount on the equity in Bitfinex because they could convert it at $1. And now they've converted 23 million of the total 72 million. And the next deadline's coming up. The end of the deadline is November to convert. We don't know what is the number where they can trade their way out of this situation. All I know is that so far, the maximum someone's lost is the people that sold their BFX token at a 70% discount. So they got a 36% haircut, then they recovered another 18% or something, which is, much better than the people in Mt. Gox. There was no good solution for it. Some people have made a lot of money speculating on BFX token, which went from 30 cents on the dollar to 60 cents at one point. So some people doubled their money on the people that don't want to take the risk and don't believe in it. And now they've got some of their most loyal customers as their shareholders, helping them with a recovery plan. And now Bitfinex, they've, in my opinion, they become more transparent. They become more media friendly. They could do more. I'd like to see the audit. I'd like to see, the report. But they've got constraints on when they can release that and those details. But because they listed on Bank to the Future, for the first time, the investors could ask their questions. The management team was responding to those, giving them their answers. And they were able to ask the questions before they decided to convert in a sensible environment. So what I did, I converted half my tokens. I should disclose. I became a shareholder. I think it's an interesting one. It's really high risk. I do some very speculative things. You shouldn't follow the things that I do.
Is that for your personal account or for your company?
No, my personal account. So I was a hack victim. So I had BFX tokens. I converted half of them and I left the others in the token, and I haven't done anything with them yet. So I'm looking for a $1 redemption from a recovery, and then dividends and exit should an institution be snapping up a lot of these BFX tokens and looking to do some kind of flip in the future.
And you got paid a fee on doing that deal for them, eh?
No, so we'd actually waived our fee, but because we instantly just wanted to prevent systemic risk in the Bitcoin sector and another Mt. Gox situation. So we didn't charge our fee to do this. We started working with the Bitfinex team and understood whether we could legally, our legal team started speaking, find out whether we could compliantly do an equity to conversion swap. We weren't involved in the BFX token. That was their decision. We only got involved once the BFX token existed, and we wanted to provide a way for those that wanted to convert to do so. And so we created a custom solution for that. And the ability for Bitfinex to pay dividends after the tokens have been redeemed and they can receive it direct into their Bitfinex accounts. And so we created that, and I just took half of the exposure and said, look, I'll wait till they can redeem these at $1 for the debt if they don't go bankrupt in the meantime, and then I'll take some dividends and equity with the other half, because then they could pay. Because if they can return to the profitability that they were, they could end up being one of the companies, one of the few companies on our platform that can actually start paying dividends if they recover.
So are you kind of like a white knight here?
I'd like to think so. Other people might disagree. Actually, sorry, we do. Let me disclose this. There's another part of that. The investors that convert, if they receive, we don't charge them on the way in. It's completely free, no management fee. But if they pay dividends or exit in the future, we get our 5% cut. So, we had an incentive to try and support this. And also, we were so heavily invested in the Bitcoin sector that we just could not handle another Mt. Gox, because that just set us back so many years in a time when all the banks are talking about blockchain, and we need Bitcoin to be, there as a solid currency.
Yeah, it's interesting that they kind of went with the, I'd call it like a forced ICO, but it seems to be making light of the situation as much as possible.
Yeah, my opinion is it was the best, is the best recovery plan. And I believe a user case, if they go bust, then that's another story. But at the moment, if they do recover, and that's a big if they do recover, this is a user case of disruption in the liquidity process that did not pay any lawyers, did not pay any auditors other than, the legal counsel on the team, and made the investors that wanted to speculate the most whole, and the ones that wanted to speculate the least, the ability to recover some of their funds that they lost.
Mm-hmm. Oh, very good. Yeah, I'm glad we kind of ended the show with that, to have a little more information. I might just add that with their unique product, one of our sponsors of the show, Bittrex, will be launching fiat pairing and margin trading in the very near future with their new site. I believe they're planning on having a similar sort of swap model where you can loan out some of your funds to earn interest on them. So we're glad to see, I guess, that funding or that product being more ubiquitous in the space, because it is definitely driving, I think, a lot more innovation in the exchanges. So
if you've got money in this sector, then you want to, as long as it's, you want to be speculating on Bitcoin, you want to hold your volatility in Bitcoin, you want exposure to that. In terms of, then if you've got more Bitcoin, you can assume some counterparty risk and receive returns on those by the margin lending market. But remember, you're taking counterparty risk. The exchange can get hacked. You could lose them all. And that, but that's what you're getting your returns for. And then you've got some longer term equity in the sector. And then you've got the extremely speculative, but sometimes interesting ICO market, which my tips on the ICO market is make sure there's a user case, but speculate on the early part, because if there's no reason to buy, every altcoin ends up with tons and tons of sellers and no buyers, and buyers has to be driven by an actual user case. And if there is no user case, there won't be any buyers. Just trade, speculatively in between, but there's no long-term investment there unless there's a reason to buy.
Does your site keep like a running track list of the private companies in this space?
No, we invested in Brave New Coin, which is doing a lot on the tracker APIs and cleaning data and big data in the sector. So they're worth looking at for some of that stuff. We haven't done anything really in the data side, but companies like some of the media companies in the sector, like Cointelegraph, they approached us about whether we could release some of our data. We've got more work. We're still trying to provide a really good platform for our investors to analyze their investments, and we've still got a lot more work to do.
Like a Joe Schlub working at Walmart or something, I couldn't really look into your world and see what deals you're looking at, eh?
No, and I don't think it's appropriate. I do agree with regulators. Now, look, I love the innovation that's happening in the completely unregulated market, the ICO market, the altcoin market. I love the interesting opportunities that's producing. But however, there's so many problems with that market in terms of, manipulation and things. And all of them, the only point in an ICO is to get your Bitcoin, because Bitcoin's the only thing that's got value. They just want, the higher the price, the more Bitcoin they can get. That's the point of it. But that's interesting. I forgot my trail of thought, actually.
I'm like a Joe Sixpack investor.
Oh yes, that was it. Yeah.
A piece of your world.
I agree with regulators.
In your world, can I?
Yeah, I agree with regulators in that I don't think this is a product for retail investors. I think if you're a retail investor, you don't have much wealth, you should be investing in other things. I don't want to tell you what you should be investing in, but regulators have said that this is for investors that can afford to make the loss, and that they can also can understand the risks. So our job is to make sure that people understand the risks and can afford to take the loss. So if someone from Walmart comes to me and says, should I be investing in Bank to the Future listed deals? Absolutely not. If you want to do something speculative in this sector and you've got money that you can afford to lose and you're willing to use it, buy some Bitcoin. And then if you start accumulating wealth, then I think this is an interesting asset class for you to diversify into.
Cool. All right. On that note, we are definitely over time, and I appreciate coming on the show, Simon, and our live audience here. You guys had some great questions for us tonight. And everyone watching at home, thank you so much. And Simon, hopefully we can talk in the future about having some of your funding, your projects on the show to maybe get a little more information out of them. I definitely look forward to that.
Yeah, we want to put them through as much DD as possible. So if you can do some of that, that's great.
Yeah, I look forward to doing it. All right, everyone at home, thank you for watching, and we'll see you in the next 1,000 blocks.